The US dollar dominates the world economy, making up over 58% of global foreign exchange reserves. But did you know that major countries like China and India are gradually moving away from dollar investments? Today we explore what this means for the US dollar and the global financial system. So what are dollar investments? Most countries hold US dollar-denominated assets like treasury securities and bonds as part of their foreign exchange reserves. These are safe, highly liquid investments often used to stabilize a nation's currency and fund international trade. For example, foreign governments can buy US Treasury bonds to park their surplus dollars securely. Here's the latest list of countries with the largest US dollar investments, measured in billions of dollars. Japan, $1,147.6 billion. United Kingdom, $858.1 billion. China, $756.4 billion. Cayman Islands, $442.7 billion. Canada, $438.5 billion. India, $227 billion in treasury bills. Switzerland, $909 billion, partly in USD. Russia, $597 billion, frozen due to sanctions. Saudi Arabia, $464 billion. Hong Kong, $426 billion. South Korea, $418 billion. Singapore, $384 billion. These figures represent investments in US treasuries and other dollar-denominated assets. Globally, foreign investors hold roughly $9 trillion in US government debt. Both China and India are reducing their US dollar exposure, but slowly and strategically. China, holdings down to $756 billion from $780 billion a year ago. Reduction is gradual, mostly letting existing holdings mature instead of sudden selling. Goal, diversify reserves, reduce reliance on the US dollar and hedge against geopolitical risks. India cut US Treasury bills from $242 billion to $227 billion, increased gold reserves to approximately 880 tons. Diversification ensures stability and protection from US dollar fluctuations. This shift is part of a larger global trend called de-dollarization, where nations reduce dependence on the dollar for international trade and reserves. The US dollar's strength relies heavily on global demand for these investments. When countries buy treasuries and hold dollars, they create consistent demand that supports the currency. When countries like China or India reduce their holdings, it slightly weakens the dollar. However, these reductions are gradual, so the impact is measured, not sudden. Meanwhile, countries like Japan and the UK continue buying, balancing the global demand. Let's recap. Countries invest in US dollar assets like treasury bonds to stabilize their economies. The largest investors include Japan, the UK, China, India and Switzerland. China and India are gradually diverting investments, shifting toward gold and local currencies. This trend reduces demand for the dollar, exerting mild pressure on its value. The US dollar's global dominance is sustained, but is slowly adjusting as the world diversifies. Understanding these shifts helps investors, traders and policymakers anticipate future currency movements and global financial trends. The world's dollar landscape is changing. China and India's moves may seem small individually, but collectively they hint at a long-term shift in global finance. Will the US dollar maintain its dominance, or will gold and other currencies rise? Only time will tell. If you find this video interesting, please share and subscribe to this channel. Thank you for watching.